Hello traders, the title of the video is how to avoid a 50% Fibonacci sweet spot biggest trading mistake like a pro. You want to watch this video and you want to watch it in full because it's a very important video for Fibonacci traders and technical traders. Over the year, Fibonacci traders are making the same biggest trading mistake. And some of those traders are not even aware of it now. And they are repeating the same mistake over and over. Today, at the end of this tutorial, one will be able to stop that madness. So you may say, George, oh, well, I'm not very sure about that. Here it is. See this candlestick bar here? This one. All right. At the time when this candlestick bar, this one here, the bullish one, has started, you can bet that a lot of day traders and scalpers maybe have lost a lot of money in that zone. One of the reasons is that they are not aware of the 50% Fibonacci retracement level, or what we call the sweet exposure. You see all the time. In fact, if you are a day trader, okay, you can go, like suppose it's 31st of October, end of the month, and the candlestick bar is closed, okay? If the prior trend, for instance, here, suppose the trend did stop here, all right? So uh, I'll give you another example. I'll give you another example, okay? I'll give you another example. So what I'm going to do, I can draw my chart, okay, very fast. Sorry about these traders, okay? So prime went up from A to B and come to the 50% level like that, okay? And a candlestick bar, the last candlestick bar on that time frame, stop exactly and close exactly on a 50% Fibonacci retracement level of the prior trend. Okay? Uh, Suppose you were here like that and there was a bullish trend and we had the 50% level and a candlestick bar like this, especially on the monthly chart close like this. If you are a day trader, you need to put that financial instrument on your bullish list. There is a high chance that at the beginning of the next month, it will start going up because usually there are buyers there because the prior trend was bullish and then you pull back to the 50% Fibonacci retracement level. And people are will be a lot of even investors, usually they rush. If you see this on a monthly chart, I'm talking about monthly, they rush to buy or to sell. So if it was a bearish trend, we'll be talking about selling near the 50% Fibonacci retracement level. If a bearish can see monthly Kennedy bar close near that level. So all I'm saying to day traders is that you can take advantage of that urge to buy or urge to sell. Like this one here, if the monthly Kennedy bar is closed on the dot on the 50% level, the following month you can play it as a day trader, expecting a bit of bounce up. If it was after a downtrend, expecting a bit of move down. You can use that, go on different chart, look at the end of the month, okay, or even during the last week of the month, start paying attention to those financial instruments that are about to close on the 50% Fibonacci retracement level of the prior trend. I need to remind traders that if you are applying this on the hourly time frame, 2 hour time frame, daily chart, you will be all over the place. You won't be as robust like the monthly chart. Okay, that's all. Here it comes. We are talking about how to avoid the 50% uh, Fibonacci sweet spot biggest trading mistake like a pro. Now, the financial instrument that we are looking at here is it's a difficult name, Van Eyck Vector Brazil Small Cap, EPIC BRF. There was a bearish trend, you see. was in a declining channel yesterday. Okay? And now it start going up a bit. Anytime a financial instrument has finished a trend, how do we know it finished the trend? When it come out of the channel. Yeah, it is. The trend is finished. I mean, now, so it display higher low. Now, it's a confirmation that now we have a higher low. After. It's a confirmation that the trend or the bearish momentum is diminishing. Okay, that's the confirmation that the bearish momentum is diminishing because it's out of the bearish. The first thing that one should do after a bearish trend or a bullish trend is completed, after the price has exited the channel, is to draw what? 50% Fibonacci retracement. That's the red line here. You'll be amazed. A lot of traders already know this, but they are not doing it. They are not doing it on a 2-hour time frame. They are not doing it on an hourly time frame. They are not doing it on a 4-hour time frame. They are not doing it on a daily chart. Price is out of a channel. You must apply the Fibonacci retracement for that price move and draw the 50% level and the 61.8% level. Because that zone is what we call the sweet spot Fibonacci zone. All right. But a mistake that we want to avoid, here it comes. I'll show you an example now. So price went up, was in a rising channel, yes or no, in this session here. Now it comes to the 50% Fibonacci retracement level. All right. Now people want to buy here in the sweet spot zone. The mistake that people are doing all the time, every day, all the time, on even an hourly time frame, 50-minute time frame, or every time frame, when they are applying a sweet spot zone, it is they are violating the market pattern consistently, and they don't even see it. Look here. Suppose, I'm using the word suppose, we had a trend like this. Suppose there was a trend like this, price went up, now it came out of the channel, like here. Now it comes to the 50% Fibonacci retracement of this trend. All right, we draw compulsory that 50% Fibonacci retracement level. Why? Because the price is out of a channel. It start turning around. Draw it. Okay, it's there. So now, what is going on? People want to buy here. Why? Because the prior trend was bullish. Come to the sweet spot zone, all right, and they want to buy here. Okay, so the mistake that they are making, people will buy here, and if you know what you are doing, if you are day trading, if you are swing trading, and you understand that, yes, George, I know it's in a declining channel. It is a contra trend. But I want to buy it. I know what I'm doing. That's fine then. But what is happening? People don't even know that they are violating the market pattern when they are buying here. So sometimes people will even try to buy even here, ignoring the channel. The pullback channel to the sweet spot zone is pointing down like this, and people are buying here, especially those that are buying and hold. Some swing traders are doing the same thing, some position traders are doing the same thing, some day traders are doing the same thing, and they are violating the market pattern all the time. Apart from the violation of the channel, I'm saying this today, but trader will say, yes, I already know that, but sometimes I've done it myself in the past when I know that I should draw a trend line. I keep doing it. I was not drawing the trend line. Okay. Every time I forget to draw the trend line. That's why in every video I keep talking about common sense trend line because I stick in my own mind to the point that I'm repeating it to traders so much. The reason is in the past I was not, I know that I should draw trend line. I know that I should draw channel, but I was not doing it. Don't ask me why, please. All right. Another reason, apart from violating the channel itself, here it is. See this one. Now, I recorded a video when I was talking about a tricky 50% sweet spot zone. I have not yet posted that video at Dayprotraders YouTube channel. I'll be posting. So If at the end of October 2019 you are watching this video, look for a video that I titled something to do. Okay, here it is. How to trade tricky Fibonacci switch spot trading signal like a pro. In that tutorial, I mentioned to traders the tricky Fibonacci switch spot. Here it is. A trend line. You see that trend line that I'm drawing? You see that trend line? Just pay attention to it. Just pay attention to that trend line. Okay, here it is. So when can we draw that trend line? After this high here. Those 2 points, this point and this point, we allow her to draw that trend line, and we can leave it there since 2011 and still have it on our charts. Now, you see, so that's the blue line there. See that? Apart from the channel, trader also ignore that bearish trend line. So, in a nutshell, this is the Fibonacci sweet spot biggest trading mistake that traders are making all the time. They are fighting the channel and the trend line. The same thing they are doing when after the price went down like this, rally up. So price rallying up to the sweet spot zone of 50% level is in a rising channel. People will be fighting again what? The channel and a bullish trend line. They do not bother to do that. And by doing so, so suppose if you didn't do that, okay, suppose you didn't draw the blue trend line, okay, you didn't pay attention to the channel and so on. You buy here, or maybe you buy somewhere here. So you see, there was a support. You see, this was a support. There was a double bottom here. So you buy here after that pullback. You say, oh, that's exactly what you said. There was a double bottom. It breaks the ball and it tests here. You see, the following candlestick bar, you see, it was a little bit bullish, but it come down. So people are trading against the market pattern, against a trend line when they are trading the 50% Fibonacci sweet spot between the 50% and 61.8% level all the time. If you go to www.dayprotraders.com, there's a web page. You have videos there when I talk about the, the web page. I titled it Fibonacci Traders. In fact, a good Fibonacci trader, that's why I titled Fibonacci Traders. A good Fibonacci trader is a trader that is trading in a channel. So when you apply Fibonacci retracement or whatever you are doing, you are always in a channel. So if the trader draw the channel like this, he or she is a Fibonacci trader, a good Fibonacci trader that is always trading in a channel. He or she will say that it's in a declining channel. 1, 2, 3, he come here. So now he say, all right, it's on the edge of the trend line. Okay. So what that trader is going to do now? Here it comes. A trader will say, okay, let's check out. That trader will do something like this. We are talking about Fibonacci. Okay, you will measure a retracement first. You see, it came down from here to here, and you pull back to the edge of the channel. You say, okay, that's 38.2% retracement. So his target for that trade, if he's selling there, his first target is here. The support here that he will secure his gain as the price approaching that level. But if he's a good Fibonacci trader, he will also apply Fibonacci extension, knowing that a retracement to 38.2% level, the minimum target is 138.2% level. All right, that's the minimum target. And the greedy target that everybody want to bring you to is here, 161.8% Fibonacci extension level. The good Fibonacci trader know that when they see that, they know. When they were doing all this, they know that there's a target. So you see, when they go below, they push it back. They bring it back. You see where he found the support. He breaks the ball. Those are Fibonacci traders controlling the price because they know this level. They know that it was a 38.2% level of this move from here to here, and they sold it down. First target, this one, and they can as I said to trader before, there are many ways we set targets. Now I'm talking about using Fibonacci extension to set a target. I talk about this also, projecting this down one by one. Okay, see, is that the target? That's it. All right, going down bit by bit. Another target. That's another way to set a target. But the Fibonacci traders, they don't forget that it's 38.2% retracement in a declining channel. So so they sort it down. So you remember that target? They know. That's why they're waiting for this bounce up. So now again, sorry again here. Those are Fibonacci traders. But they know that the ultimate target, Fibonacci target, this one. But they you see, they also know about this target also that I'm using now. This one projecting it down like this, you see. So all I'm saying to you is this: if you want to be a good Fibonacci trader, you must use the Fibonacci retracement, whatever you call it, with the channel. The violation of the channel and the trend line, and this is what we talk about today. Okay, the biggest trading mistake that Fibonacci traders are making consistently, day in, day out. Whether they are investors, position traders, technical traders, they are doing it on even when they are scalping. People don't even see it. They don't even feel it. But one more thing before I wrap it up, because I don't want traders. The reason why I'm speaking like this, please do not think that if you are new to, I don't think that I'm patronizing you. A lot of traders have been following me know that sometimes George get a little bit emotional and he will be stressing on the world at that. All right. So they know how to put up with me. Another trader may say, Joe, who are you to talk to me like this? All right. How long have you been trading? Show me your trading account, please. All right, something like that. Okay. Now, okay. So another thing I want to tell you before we wrap it up. Okay. So after a bearish or bullish trend, one should draw the 50% Fibonacci retracement level. So when a trend is out straight away, you must draw 50% level if you are a good Fibonacci trader. All right. Well, you should know where is it. Draw the 61.8% level. So that's why I say also the sweet spot zone. The sweet spot zone is the zone between the 50% and 61.8%. Automatically, after it came out already, and especially if you from this higher already, bearish momentum is diminishing. All right. Now, the point I want to make before we wrap it up is this. You see now, we are out of the dark channel, isn't it? Yes or no? And we have drawn on that line, and the sweet spot zone is there. The reason why we are doing that automatically at the end of a trend, bullish or bearish, is to know to prepare ourselves. We don't want to miss opportunity. We want to know where we are headed. Okay, you see now. So right now, okay, the price is going up. Yes or no? Okay. So again, this is what we are talking about. If you are a good Fibonacci trader, you will never. That's why I posted those video. The video there are from Facebook. All right, I recorded them on Facebook, and I posted them. I called them Fibonacci Traders. It's a web page titled Fibonacci Traders. All video. Usually traders say, "Oh, I don't want to watch video on website. I like to go on YouTube." Sometimes you have to. Okay. Again, here it is. It's a channel, isn't it? Is it a channel? Yes, it's a channel. Yes or no? Seen what? A rising channel. So if you are a good Fibonacci trader and you want to play it again, okay, 50%. So it's now in the sweet spot zone of this move from here to here. All right. So from the sweet spot zone, trader will be watching which zone. First minimum target 138.2%, extension of this one, and 150. I like that 150. If it touch the sweet spot zone like that, I'll prefer 150% Fibonacci extension, 150% Fibonacci extension level of this one. So they are watching all this. So if you want us to develop this topic a little bit more, here it is. Okay, here it is. Okay, we can develop that a little bit more. Uh, this okay. I have too many. Let's move this one away. Can you see now? So what is So my 150 is between 138 and 161.8, somewhere here. So quite close to our sweet spot zone. All right. So this channel is a little bit slanted. Okay, it's a little bit slanted. The prime may, I'm saying this carefully, okay? Carefully. Prime may go above that channel at the time when it reaches that zone, if it reaches it. I'm not saying that it will definitely reach it straight away. It may come back below it, forming a double bottom here before going up. If the bullish momentum, if it continues like this, it has a high chance to go above that channel. So all in all, anytime the price coming to the sweet spot zone or near 50% level, it will be in a rising channel or coming from one rising channel to the next rising channel. And one Fibonacci trader must avoid the same Fibonacci mistake, which means okay, trading against trend line. You see, there's a trend line here. Trading against the market pattern when one is applying Fibonacci retracement or Fibonacci extension, especially the sweet spot zone. And for the sweet spot zone trading, people love to buy in a 50% Fibonacci retracement zone, in a sweet spot zone after bullish trend, they would like to sell there, but they forget all the time what I've said today. The channel and the trend line that have drawn now, it's going on all the time, and you don't want to do that. That's all. So if you get a message, I'm a happy person. All right. So remember to do that. Trend is finished. Draw the 50% Fibonacci retracement level. You are trading at the switch position. Remember the channel. Remember the trend line. A good Fibonacci trader does not fight the channel or the market pattern or the trend line. That's what I'm saying. If you are a day trader and a price like this one here, blah 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 blah, and then one day you see that this a monthly chart, a monthly candlestick back come and close on the dot at a 50% Fibonacci retracement level, like that. Following month, watch it, all right, watch it, because people are waiting here to sell. You may see a good day trading setup. I'm not saying that definitely is going to go down. The first reaction, because it was a down, now it reaches it, the reaction will be people will be trying to sell. Those are crazy Fibonacci traders. So this provides excellent opportunity for a day trader watching the activity after that monthly candlestick is closed. But remember, during the first and the 8th of each month, it's quite challenging to day trade. That's all. All right? But when you are doing it, you know what you are doing, and you just want to grab a nice profit and run away with it. All right, that's what you want to do. All right, so this will conclude our discussion today about how to avoid 50% Fibonacci sweet spot biggest trading mistake like a pop. Have any question, suggestion, put in a comment section. And in due course, I'll be recording another video to answer your specific question. If this video has been useful to you, please let us know by giving us the thumbs up. If you dislike it, be sure to mark it down straight away. But do not mark it down because you say, George, you're talking too much about Fibonacci. I want you to talk about RSL CCI. Put in the comment section, George, do you mind to record a video about that topic? And so don't mark the video down because you don't like the topic. All right, mark the video down if the video is bad. That will help me a bit because I want to know whether it was bad or not. Okay, so don't mark it down for bad reason. Mark it down for good reason. That's what I'm saying. All right. However, if you think it's an essential tutorial, feel free to share it with your friend on the social media. That will be helpful for me and for yourself, so other traders do not mess up your trade. For new traders, as always, use a demo account, practice until master it before going live with a strategy like this. Because when you are practicing, you make mistake and you get more experience and you develop your skills. Combine the technical trading with the fundamental. And again, when you discover the mistake that you are making, don't do it again. That's it. That's how you start improving. But if you learn something like this and then you forget, so which I said to you before, I done the same thing, trend line, drawing my trend line. when you made that mistake, when you are reviewing the trade, say, oh, I made it. So you can put a sticker on your computer like this and say, oh, I will remember from today, okay, drawing my trend line, or I will always draw the 50% Fibonacci retracement level after price exit a trend line, exit a channel. All right, so if you we can continue with this discussion and go on and on. You see, now our chat is not very good here. It's going on all over the place. People don't react. Okay, so now you see. So you see this session here. I'll show you now in a minute. So here we are. So here we are. You will see good Fibonacci traders habit. All right, here it is now. Is he out of a channel? Yes. And he form a high low on a daily chart. Yes or no? What do you do? Very simple, my friend. Very simple. You will apply Fibonacci retracement. That's what I was talking about the whole day. Yes, you know. Are you going to highlight which level? At the 50% Fibonacci retracement level. That's a line here. Look at the reaction of the price in that zone. So those are the mistakes people are making all the time. You see, yeah. So you find a resistance there, blah blah blah. Then you find a support there, blah blah blah. You see, then you form a double bottom with a lower low here before bouncing up on that 50% level on a daily chart from here to here is out of a channel. You can we can go on and on and on and on talk about this the whole day. I can show you hundreds of example until I brainwash you to the point that you never okay, now I'm saying this. So we talk about this now. You see this now? Okay. If you play with that again, if you're watching it up to the end like this, it means that you want to understand it fully, yes or no? You see. Well, it's a 50% level. Here it is. Are you getting it now? That's our new 50% level. Right. That's one. So look. So prior when it was in a rising channel, yes or no? And it is look the reaction of 50% level. Whether you are day trading, here it is. It's the same thing. Here, now we have a bullish chart pattern. Here, look at that. Inverted, and I show that chart pattern in that zone. It's going on all the time. All the time. Even if you go on a 50-minute time frame, you'll be amazed for scalping, but this chart I don't like it. So you can do the same thing on a 50-minute time frame. Or like this, come off the channel, 50% level, and so on and so on. So this is it. Don't violate the market pattern. Don't fight the trend line. Okay, and so on and so on. Happy trading to you all, and I will speak to you soon. I said enough. I think you get a message, and you are now okay. In French, we say un homme averti en vaut deux. All right. Now you are one. You become two person, the old person and the new person. So be the new person that is trading the Fibonacci in a channel, the extension, doing it properly day in, day out. That's how the good Fibonacci traders are trading. Thank you for watching, and I will speak to you soon. The financial instrument that we are analyzing today is a Van Eyck Vector Brazil Small Cap EPIC BRF. Until the next time, enjoy yourself and be very happy. We are the TSTWSYS 008 traders talking about after a bearish or bullish trend, one should draw the 50% Fibonacci retracement, also the sweet spot zone. How to avoid Fibonacci sweet spot, biggest trading mistake like a pro.